All right. So we live. So we live. We live. We live. So today we'll be going over NQ, right? Because remember we are all-time highs. If you go to a daily chart, if I could find. So look, if you go to a daily chart. So look, if you go to a daily chart, we see that we are all-time highs, right? That's the first thing we see. We are all-time highs. So let's notate that. We got highs. So that's the first thing you want to do. You want to find the highs to understand where are you, right? Where are you in price? So we got the highest high, which is the highest wick. Then you would draw the lowest wick. And remember, you always want to notate what are you drawing because you want to understand where you at. So we got the daily high and we got the daily low. Right? Now, the next thing I'm looking for is, so you see how there's no price action above, right? There's nothing above. So you just cannot assume that you're just going to keep going lower or higher, right? You just have to actually just let price action show you where it want to go. So just by reading this daily, remember what's going on, right? So if we're bullish, we have to wait for it to give us indication that it wants to go bearish. Right now, what we keep doing, we keep making higher highs. So let's start from here. So right here, we have a high. So we have a high right here. Bomb. We have another high. Bomb. Then we have a low. Bomb. Right. So once you're looking at that, you're looking like, okay, is the low being sweep or is the high being sweep? Right? So we got the sweep of the low, these lows. But did markets come down below here? No, it didn't. It keeps taking the highs. Look, it keeps taking this high, and now it's at this high, right? And if you just use your analysis, you just go up, down, go up, down. It just keeps going up. So you just have to assume that, okay, it's probably going to just keep going up, right? You don't want to really like super assume about what's going on. You just want to let price action, which is the candlesticks, give you indications, right, on basically where the market will go. So now that we got the daily high and the daily low, let me erase all this right quick for the moment. So we got the daily high, we got a daily low. Now let's go to a 15-minute chart and let's get some more context. Right, let's get some more context. Now we're on a 15-minute chart. Right? Let's see what's going on. So as you see here, it's just going up, as you see, right? It's just constantly going up, coming down, going up, coming down, going up. So in my mind, I'm bullish. I'm bullish. Why I'm bullish? Because on every time frame and on a higher time frame, we're bullish. We're bullish on the high, so we're bullish. So look, let's go to a weekly chart. This is the weekly chart. So look, we keep making higher highs. So we're bullish on a weekly chart, right? You go to a daily chart. This is a daily chart. What we keep doing? We keep taking the high. So look, did we take this low? No. Did we take this high? Yes. See what I'm saying? It just keep going higher. So we're bullish on a daily chart. Same thing. All time frames, we're bullish. So you just have to assume that you're going to stay bullish. And right now, the target is these highs because it's at all-time highs until it gives us indication that it wants to go lower. Right? So if we just zoom in, because price is about to open in about 4 hours, right? The market is about to open in 4 hours. So this is how I get prepared for the market. Right? And if you got any questions, just put them in as we go, and I'll answer them as I go. We live on YouTube, we live on Instagram Live, we live on the Discord. So if we zoom in, right, let's just look at it. Did we take this low right here? So where's the recent? So first of all, let's just go to the range that we're in. This is the recent high up here. This is the recent low. That's the first thing you want to look at. So remember, we're bullish, right? So you got to look at where are you right now. Okay, we have all-time highs and we have this low. So what you can do is you can grab your fib and you can draw from the high to the low, right? And if you know about equilibrium, remember price action does 4 things at all times. It generates liquidity, which is it's generating the highs. It's creating the highs. It just created this high. Same thing with this low. It's generating this low, right? It's generating the low. Remember, the market does 4 things at all time. It generates liquidity, then it hunts the liquidity, which means is it takes the liquidity out. So remember, before this was a low right here, right? Let me zoom in right quick so everybody on Instagram can see. So look, let me zoom in right quick. This was a low, right? And then this, so this was a low and this was a high, right? This was the recent low and high. So now it comes up, it takes the low. So it generated this high and this low. Now it's time to hunt the liquidity. It's time to hunt the highs and lows. That's the first 2 things that the market does. It generates the highs and lows, and then it takes the highs and lows. So now it took the highs and lows, but look what happened. And it kept going up, but look what happened. It left these lows still intact, right? So these lows is generated. It created this low. It created this low. It created this high, and now it took the high, but it left the low, right? So this low is still generated, right? So now what it did now, it created a high. So now it created this low and it created this high. Now, did it take out this low? Did it take out this high? No, it created a high and it displaced all the way down. And then it took out all of these lows that it just generated. It swept all of the lows out. So now the market just did the 2 things. It just generated the highs and lows, and then it took out the highs and lows. It took out the low, but it didn't take out the high yet. That's why. So now that's the 2 things. So now what's the 3rd thing? It rebalanced to an inefficiency, right? So what is an inefficiency? An inefficiency is a gap, which is a fair value gap, right? Remember, which one is it going to go to? Because if I delete this line right here, and this run down right here, how many fair value gaps you see? Remember, a fair value gap is a 3 candlestick pattern. 1, 2, 3. It could be any 1, 2, 3. But when the first wick and the 3rd wick do not touch, that's a fair value gap. So we got one right here. We got one right here. We got one right here. And that's it. So now we understand that price is supposed to generate the highs and lows. It's supposed to take the highs and lows. Then it's going to rebalance to an inefficiency, which is a gap. As you see here, it created this low, and then it came right to this gap. It came right to the gap. Then it went lower. Now, what's the 4th thing? It's going to rebalance to an equilibrium, right? It's going to rebalance to equilibrium. Equilibrium is basically 50% of the range that you're looking at. Whatever range you're looking at is just equilibrium, the 50% range. So that's why I said, look for the range that you're in right now. Right now, this is the recent high. Right now, this is the recent low. This high has not been taken out, and this low has not been taken out, and this high has not been taken out. What I mean by taken out is it comes lower like this. This lower here, you see how price action came lower? See how price action came lower than this low? It took out the low because there's money at the highs and lows. That's liquidity. Liquidity is money. Highs and lows, right? So now the market generates the highs and lows, which is generate liquidity. Then it hunts the liquidity, which it takes it out, and then it rebalances to an efficiency, which is a gap, right? And then it rebalances to equilibrium of the range. So it's always doing those 4 things at all times. So now, how do you find equilibrium of this range right here? How do you find equilibrium of this range right here? This is how you do it. The easiest way is to get your fib retracements, right? Get your fib and draw from the high to the low, right? This 50% range is the middle. So remember, and look, it did all four things. It generated the highs. It took in the highs. It didn't take this high yet. It took the low. It rebalanced to an inefficiency, which is both gaps. It rebalanced to both gaps, and it rebalanced to equilibrium of the range, which is here. Right? There's different quadrants and different ranges. So now I understand we're bullish. So remember, it did all four things. So now I'm thinking that up here is the target because why? This zone up here is still unmitigated. This high up here is still hasn't been swept yet. It just swept. So remember, it just swept these lows. So let's bring it back again. Let's bring it back again. Let's bring it back again, right? Let's bring it back again. It generated this high and this low. Now, it's unmitigated, which means as it didn't take it. It didn't sweep it. It didn't come above this high or this low, right? So now it comes up. Now, it takes this high, right? It took the high. That's what I mean about a high. A sweep, it swept the highs. So it swept this high right here. So this high right here is basically mitigated. It's swept. Now, this low right here is still unmitigated, which means is it didn't get swept yet. There's money still resting here. There's money still resting here. There's no more money resting here because why? It swept it. There's no more money resting here right now. So now it swept the highs. It came all the way up. It came all the way up, came all the way up, created another high. So now it was at this high and this high. It was unmitigated. So now it created the highs and lows. It generated the highs and lows, right? Now, what's the next thing? It's going to hunt the highs and lows. So it just created this high. It just created this low. Now, the market needs to remember rebalance. So they got to like pull it back. They got to like come back one. And then they got to do what? Come back to an inefficiency, which is a gap. Two. So that's how sometimes when it takes the high, when people think it's going to go long, when it take the high, you're going to get burnt every time because it's understanding liquidity. You got to understand liquidity. So then it come all the way down and take these lows. So look what it did. It generated this high and this low. It took the low. It left this high untapped. And then look what happened. It rebalanced to an inefficiency, which is this gap. And then 3. And then it rebalance to equilibrium of the range from here to here? Yes. 50% range is right here. You got your fib. You jump from the high to the low. And that's how you get the 50% range. Right? So now what's the next thing to do is to take out the top high. So now, right now, this high is unmitigated and this low is unmitigated. Right? But if you understand about order blocks, right? This is a 15-minute order block. A bearish order block. We have a big bullish candle, and then we got an aggressive close below, creating a fair value gap. So now price is literally right here. Remember, the most sensitive part of the order block, same thing. You got the fib, you drop from the high to the low of the order block. Now you're looking at, okay, did it get to mean threshold of this bullish 15-minute order block? No, it didn't. Right? So right now, on a smaller time frame, I might be bearish right now until it show me otherwise. But don't get it twisted. Yes, we're bullish on the long sense, but right now, on a 15-minute time frame, it's showing bearish. Right? If I zoom, matter of fact, let me leave here. So now what I see here off this zone. So it came to the most sensitive part of the order block, displaced a little bit lower, right? Creating another 15-minute order block, which is right here. Did it leave a fair value gap? Yes, it did. It left a 15-minute fair value gap. Now, when you're trading on a higher time frame, you got to know how to keep going down, right? Because I don't trade on a 15-minute time frame. I'm just doing my market analysis. Right? Hold on. Somebody had a question. So it should go up and take the fair value gap, either keep going or yes. So that's what you remember. It's all about being an observer. So it's all about, okay, building a narrative, and then when it gets to certain levels, now you like, okay, this is what I want to see, this is what I don't want to see. So let me go back at it again. This is a 15-minute order block, right? A 15-minute bearish order block, right? We're bullish on a higher time frame, but right now I'm on a 15-minute time frame. We're at all-time highs, right? So now I want to see when price gets up to this zone right here, which is 50% of this 15-minute order block. I want to see how price reacts. Just like support and resistance. When it gets to the support, you want to see if it's support or not. You want to wait and see. And then react. You don't want to anticipate. So I'm saying? So right now, this is the 15-minute order block. I'm expecting it to reject because I'm just reading price action. That's all I'm doing. Reading price action. I'm just reading price action. I'm expecting it to reject. Right now, I see it made the 15-minute order block and it left a fair value gap. So now remember, look what happened. I'm expecting now, remember, it's getting in the area where I'm expecting it to reject from, which is this 15-minute order block. Right? But remember, I don't want to just catch a trade off of the zone. Because why? You don't want to anticipate. You want to be patient. Remember, the 4 key components to be a profitable day trader. You have to be patient. You gotta have a discipline. You gotta have a risk management, and you gotta have a high quality setup. All right, right. Analyze and look for confirmations to actual enter. And there you go. There you go. You're right, Jasmine. You're correct. You want to wait. So you want to build your play out, build your narrative out, right? You want to build it out like what I'm doing right now. I'm just reading price action. Price action is just reading what you see, right? So now it hit. Remember, I'm expecting it to reject at this 15-minute bearish order block. It came up and then it just came all the way down. So when it gets up in this zone, I want to wait and be patient. So now it hit this zone, it dropped lower. Now, okay, it created an order block. Now I may want to get in because the target could be lower right now before we go higher. Right? Jareen price action. So now I'm gonna go to a 5-minute. What happened in this 5-minute zone right here? So I'm gonna zoom in on 5-minute. Now I'm like, okay, bomb. Remember, if I'm bearish, I want bullish candles to support price lower, right? If I'm bearish, I want bullish candles to hold as resistance. Sorry. So if I'm bearish, I want bullish candles to hold as resistance to go lower, right? If I'm bullish, I want to see bearish candles hold as support to bounce and go higher, right? So this is a 15-minute fair value gap. Now, I don't trade on 15-minute chart. Now I go down to a smaller time frame, which is a 5-minute. Now I'm looking to 1LC because I want to get my entry on a 1-minute. Right? Now I'm on a 5-minute. Now I see what it did. It created a 5-minute order block right here. Displacement lower. So I may be late. So what I gotta do, I have to wait and I have to let price action give me more indications on. Do I jump in? Because I don't want to get in here. The move was up here. The move was up here. You don't want to, remember, you don't want to chase price. You don't want to be chasing it. I just dropped that shit. Right? So you don't want to chase it. So anyways, this is where price at right now. So now when price open at 6 o'clock, which is in what, 3.5 hours, I'm expecting it to what? It's probably going to gap up. Who knows? But right now, this is my recent high right here. This is my recent low right here. This is what I'm looking for because these are the recent highs and lows that just got generated. Remember, the market does 4 things at all time. Generate liquidity, takes the liquidity, rebalance to an inefficiency, and rebalance to equilibrium. It does that at all times. So right now, it just generated this high and this high. And it just generated these lows. So right now, these lows look kind of sweet right now. Right? Because if you know about the power of 3, the market loves to accumulate, manipulate, and distribute. Right? So like right here, the market loves to, so it's accumulating, which is just consolidating, right? Accumulation. It's just creating highs and lows. It's building, so it's generating highs and lows. And then it manipulates. It will fake out. Remember, manipulation is a fake out. It'll manipulate lower to entice all of these people right here, support and resistance, to go short. So it'll trigger you in to go short. And then it'll come back into the zone. Because now remember, support and resistance is you want to use old support turns to new resistance turns to old support. But what it does, it comes up, manipulates lower, and then just distributes away and keeps going. That's the power of 3. This is the power of 3. Accumulation, which is it's just accumulating. Support. Remember, support is the floor, right? Think of support as the floor, right? So let me zoom in right quick. Think of the support as the floor, and then think of resistance as the ceiling, right? So it's just, is that support, resistance, support, resistance, support. In this zone, when it's doing this, when it's accumulating, there's no trades. When it's accumulating, when you see it accumulating, there's no trades, because the power of 3. This is how your candlestick works. It opens, then it will manipulate. It'll open here, go low, manipulate lower, and then go up. And depending if it's bullish or bearish or not, it'll close at near the high or near the low. Right? So right now, on a higher time frame, I'm bullish, but on a smaller time frame, I'm bearish. Why? Because this is what price action is showing me. Remember, price loves to come fuck up these highs, these lows, right? You see these relative lows right here? You see how sweet this looks? All these relative lows, right? It tried to go to these highs, but look what happened. It stopped right at equilibrium, which is 50% of the range. It stopped. It didn't even get here yet. And then it displaced lower. You know what I'm saying? So if you got some key information on this, right? If you got some key information, please like and comment anything. Just comment whatever you want to comment, the good or bad, because remember, I'm trying to get better every day, right? That's what it's about, getting better every day. So anyways, man, I'm out of here, man. I gave y'all a good 22 minutes. I'll catch y'all on a rebound. You done. All right, YouTube live. I appreciate y'all live, man. Listen, if y'all listen to this on live, the cheat code is don't focus on the money. See, I ain't give this to my Instagram people. Look, the cheat code is don't focus on the money, because when you focus on the money, it's gonna make you think irrational. You're gonna be, when you lose, now you're gonna go to revenge trading, and then when you start revenge trading, now you go to over trading. When you go to over trading, that's how you overblow your account. You don't want to blow your account. You know what I'm saying? You don't want to blow your account. You want to grow your account. You want to scale your account. You don't want to blow your account and keep trying to add more money, add more money, add more money. And this is what I'm gonna start doing too on YouTube. I'm gonna start doing trading reviews. That's my new idea. Y'all listen to this first. I'm gonna start doing trading ideas. That's what I'm gonna do. I mean, trading recap. So what I'm gonna do is I'm gonna find any profitable day trader that y'all like, or that I'm gonna start off just and find anybody that I like, and I'm gonna be doing trade reviews about how much money they made and stuff like that. You know, a little recap, and I'm gonna see how I can incorporate it into my trading, because I'm not bringing in racks right now. So I'm trying to learn how to bring in racks, but not really. I just want to learn. I don't want to do it. I just want to learn how to do it. You know what I'm saying? Once I learn how to do it, I can incorporate it into my sauce. Then I could reincarnate it, you know what I'm saying, into my arsenal, and then I could present it on the market. And then once I run it up, because remember, money is just a byproduct of being the thing, right? So if I'm a good trader, the money is going to show me, is going to be the facts, right? So until you see somebody really running it up for real, they may not be a good trader yet. That's why I focus on learning how to do it, becoming the person who can do the thing to eventually have everything I'm trying to get. Bro, stay tuned, man. I'm gonna do a little trade review today. I learned how to make a little thumbnail. I made my first thumbnail, so remember, it's okay to be bad at something like a thumbnail. I don't really make thumbnails, so of course I'm not be good at it. right? But that's not an excuse. I learned on YouTube, I figured out how to do it, and I did it. Right? Now, remember, it's okay to be bad at something. Like right now, I'm not bad, I'm bad at it, right? Which means I'm not good at it. The thumbnail I'm making right now is not really good, right? It's just, I just put shit together, I just figured out how to do it. Now, I have to work on getting good at the thumbnail now. That's the key. Now I have to work on getting good at making thumbnails. So now in 2, 3, 4, 5 months, and I'm still regular at thumbnails, now it's like, damn, bro. Okay, I gave you a pass because you was new at the thumbnail game. But now it's been 4, 5, 6, 7, 8 months. You still bad at it. See, it's okay to be bad at something, but it's not okay to stay bad at it. Because if you stay bad at it, that means you're not putting in no work for real. Think about it. Let's talk about it. So y'all know this is my little market maker. So I'm saying this is the market. So when I do good, I talk to the market. When I do bad, I talk to the market in different type of tones. Anyway, I'm gonna be here for a while, bro. This is just the beginning. Like, I'm not the big profitable day trader right now, right? But why would I wait? Because think about it. Once you become the person, then people want to start. Then you want to start, making it a business, and because now you're the person, you're making money from it. So now you want to teach people. So look, I'm doing that first. I'm sharing my experiences. I'm teaching people the things that I know works for real, that I'm doing. Everything I'm teaching is what I'm doing. So I'm literally giving y'all a little sneak peek in my little journey. This is the beginning, because I'm at break-even stage in my training journey. Like I'm like a little bit losing break-even stage. That's where I'm at in my journey. So a lot of niggas could never even get to that. Anyway, but I'm here to put y'all on to help y'all, using to help myself. Anyways, not catch y'all on email. I appreciate y'all YouTube. Like, subscribe, comment. If you got some game, and if you didn't get some game, some good, put what the fuck did you get? I'm out of here, y'all, buzz.